Hello guys, welcome to another strategy initiation video. This is for the call calendar strategy video. Let's see in Opstra what are the strikes we are choosing and what premium we will pay and what will be the required margin. So I have opened Opstra. So we are taking Nifty in the options segment and I am selecting the December 2021 expiry, and the strike what I have selected is 17,500. So 17,500 is just out of the money, 3 to 4 strikes out of the money. The market is in uptrend. So let's see how this works out. So let us just take this again because the premiums will change. December 17,500, it is now at 440. We are buying single lot. Okay, we'll add the position, and the same strike we are going to sell in weekly. So weekly expiry is 9th of September. So 9th of September we are selling it for 36 rupees, around 36 rupees. So we'll add the position, and the payoff date is, I have put 9th. So let's see how the strategy looks like. So it will look like a straddle with a curved profile. So the profit what we are expecting is 6542. The 6542 is closing both the legs together by end of the weekly expiry, and the market coming and expiring exactly at 17,500. That is when we will get the max profit. Okay, we are not expecting to get this. What we are expecting to get is the 36.05. So 36.05 multiplied by, we can say, 50 quantity. So we will get somewhere about 1,800 rupees. So that is what we are trying to capture for this week. And why we are choosing 36 rupees, you can say 440 rupees is what we have paid. So that is what is showing in the max loss, because max loss is basically our debit paid. Debit paid means we have collected a credit and we have paid this debit. So that is what it is showing. So 440, and how many weeks are left you have to see. So from the current week up to December 2021, 30th December 2021 expiry, we have got about 17 weeks left. So 17 weeks, you consider that we will collect the premium, because market is right now in the uptrend. So 17,500 is just only time being. The market may cross 17,500. Even if it does not cross, we will be eating lot of premiums in the weekly. Okay, so that is the strategy. So 440, you can say you can divide it by 17 weeks, and whatever is the premium you are getting, you will get somewhere around 30 to 33 rupees. That is the premium you will get there to collect weekly. So the nearest premium available is 36 rupees. That is what I have chosen. So every week we consider that this premium will decay and it will go to 0. So that is the expectation. If some weeks, if this premium is going up and it is expiring in the money, means 17,500 is in the money, means your long term option is also in the money, and your premium, this 440, will be much higher. It will be somewhere around 500, 600. So depending on how much time left in this option. Okay, so as usual, probability is little higher than 50%. Max profit we explained. So max loss is basically what you paid and what you collected back. So that difference is your maximum loss. That is the debit paid. That is also your maximum loss. Risk reward ratio, there is no need to see for the call calendar, because every week we will be collecting some premium. So this is for this week. And the break evens, since we are taking out of the money, your lower side break even is quite near, but not to worry about that. If the lower side break even breaches also, your weekly call will be in a very good profit, because the premiums would have already eroded. Your long term call will be in minor loss, but that loss is not a realized loss. So that loss is basically your MTM loss only. So if the market moves up, so that loss will get recovered. Okay, So as usual, the premium what is mentioned here is not correct. So you will require about 40,000 rupees to take this strategy. It is showing about 20k, but it is double of that. So it will be about 40k will be required to take this strategy. Okay. So this strategy is already taken. So let's go through the performance week by week. If we, when the series will end, when we are closing both the spreads together, it may happen before December 30th, but I will keep you posted. Means I am showing mainly an obstra. The real position is already taken, but the premiums were different. That is why I am not showing that one. I will show you the real premiums what I have taken. You can see these are the real premiums. Means I entered at 365 rupees and I have sold for 39 rupees. Means the sold premium is more or less same. Even today it is more or less same, but this was entered couple of days back. I have got another call calendar going on. So that is at 17,000. Means that was entered much earlier. So that is giving a super duper profit. Already in within 3 days it is at about 10,000 rupees of profit. But right now you can see the call calendar of 17,500 December and 9th September 17,500. So you can see both the positions are right now in a good profit. This is at about 3.5k profit. This is just break even. Okay. So these are the positions. Since I have taken it couple of days back and I am recording it today, not big difference is there because we are looking at 17 weeks. So this is only 1 week. If market goes down a little bit, this 435 will become 400. So then all the trades will be more or less same only. Okay. So don't think that I am showing obstra, but I can show you the real position, how it is moving. You can see this is a real trade. I am giving you couple of days late because that day when I took the positions, I did not had a chance to record because I took the position in a different computer. So in this computer, I have the option to record the video and post it. Okay. So 17,500. So I will go back to our positions. So you can say 17,500 December call option buy at 440 and 9th September 17,500 call option sell. This is a calendar. This is not diagonal because it is same strike, different expiry. So this is a calendar. So I'll keep you updated time to time whenever like we are closing this position or closing the entire position. It will be like weekly once. We are not expecting to do adjustments daily. There are no adjustments here. Because once this call option goes in the money, your long term option will also be in the money, and that will basically compensate all the losses what we are making in the weekly. So let us see, means if the market shoots up further and we are somewhere here or here, that time we will close. Means for that the market needs to go to 17,800, 17,750, 17,800. Means within this week. If that happens, we will close, but we will be closing it with very good profit because the profile graph would have gone up. We'll be closing with about 2k 3k of profit we will do if it happens. This if the market goes down too much, we don't have to worry too much because once it goes down it will recover back. So our long term option will come in profit. We are taking out of the money long term options because the premium is already very high. For this you need cash. 440 rupees multiplied by 50. So you will need about 22,000 rupees of cash, means to fund this option. And while selling this you might require a lesser capital. Probably that is what it is showing here. So together you will need somewhere about 40,000 rupees in your account, 20,000 in cash and the remaining in collateral probably. So if you have that, you can take this position. I'll keep you posted. Thank you. Hello guys, welcome to the call calendar weekly roll up session. So you remember that we have taken a call calendar of 17,500 December month and 17,500 for this week expiry. So today is 9th of September and the market is currently at around 7350. So our 17,500 call option expiring today is right now trading at about 2 rupees. We will wait for this option to become somewhere about 1 rupees. So right now the time is around 10:30 in the morning. So we will wait for about 1 o'clock, 2 o'clock. So that time this option will trade very less, maybe around like 1 rupee. And there is another trade is there, 17,000 December and 17,400 expiring this week. So this is also trading at a good profit. Morning it was trading less than 10 rupees. Since the market has gone up a little bit, so it is trading at about 11 rupees. So if the market continues to trade in this range, this will also come down quite nicely. Let's see means how it goes. Means if the market goes above 17,400, we have a cushion up to 17,400 plus 36 what we have collected, so 17,436. So we will not be making any loss till that time. Let's see means how it goes. Already the long-term options are running at a very good profit. We will try to close this option also close to like 1 rupee. Means if the market trades at this range till 1 o'clock, 2 o'clock, or it goes down, going down, this option will decay very fast. If the market is trading at around the same level by 1 o'clock or 2 o'clock, this will be trading somewhere around 7 rupees or 8 rupees in that range. So we will try to wait for a little bit more time. Since today is a expiry, the market can go anywhere. You can see while talking itself, the market has gone up by another 10 to 15 points. So that is why the option is spiking up. We saw around 11 rupees. So now it is around 14, 15 rupees. You see it starts going up. So expiry trades, the gamma effect will be quite high on the day of expiry because this is now at the money. Because the market has already crossed 17,350. So now this 17,400 strike has become at the money. So that is why the gamma effect will kick in and it will start moving up. If the market, see, these movements are quite normal. Means the market going up by 5-10 points, then coming down. So that is quite normal. So we need to watch this option, because if the market goes up, your long-term option will also go up. You see, when we started, it was somewhere trading around 16,000 plus. Now it has gained around 1,000 rupees, 500 to 1,000 rupees, 17,000 plus. That is how means the long-term option will also behave. So even like if it goes to 15,600, 15,700, which is not possible today, but for example, I am telling if this goes to 15,600, 700, this option will be deep in the money and your option of 17,000 CE is already in the money. Deep in the money, that option will act like spot. For every 1 point of move, this option will also move around 1 point. Not exactly 1 point, it will be moving around 60 paisa or something. Since it has a lot of time, so the move would be much higher. You see the market has not moved anywhere, but you can see the option gain and loss. You can see here the December 17,000 CE is currently trading at 770, but from yesterday's close it is trading about 2% low. But the same option which is expiring this week, you can see that it is trading at about 50 to 60% down from yesterday's close. So this is what the time decay will work. On the weekly options, it will be very higher. On the long-term options, there is also a time decay, but the effect of theta decay will be very less. The option will decay slowly because it has got lot of time. But for this week option, there is absolutely no time left. We have got hardly about 5 hours left for this option. So in 5 hours, if the market moves very violently, this option can move like anything, but your long-term options gain will actually compensate for your short-term options loss, whatever is coming. Okay, so just this is a follow-up. When I adjust the position, maybe in the next section you will find means how we are adjusting the position. Right now means I am just updating you about the current position on the day of expiry, because I had already given in the previous section what is the positions we have taken and how it is running. So right now you can see that on the expiry day, you can see means how the decay is working. So I will catch you up when I am adjusting this position for the weekly roll, because weekly roll means we will still hold this option. We will be rolling these two options against this. We will be rolling these two options to the 16th of September expiry. So this video series is going to be quite long because we will be closing this. When we close this, that time the series, call calendar series, will end. So right now we have a call calendar and we have a call diagonal. You can see call diagonal is 100 quantity, 2 lots, and call calendar is only single lot. So we will continue to track this one, and I will keep you updated. Thank you. Hello guys. Waiting for the other 17,400 order to execute. So I have got a exit limit order at around 1 rupees. So right now it is trading at around 2.2, 2.15. So the order what was there for 17,500 for this week. So that got executed at about 50 paisa. So the positions, we have already booked a profit of around 1,925 in one position. So I am just waiting for the 17,400 order to execute. So it is at about 2 rupees. So it is coming down because the market has gone down a little bit. So I have my next order ready. So that is 16th of September expiry, 17,500 at about 38 rupees. So since one order got executed, so I'll be executing this order at about 39 rupees. So let's see, we'll sell this. So what was executed is 50 quantity. So I'll just put 30. Yeah, it is going up. So I'll put 40 rupees. So let's see. If it is not executing, I'll come down a little bit. Okay. So this is a regular overnight order, limit at 40 rupees. And quantity is 50. 50 got executed. So I am doing 50. Yeah, it is going to 40. Yeah, limit order placed. It went to 40. I just executed, so it is coming down a little bit. Let's see. 39.90 should get executed. Let us see the bid ask. Bid ask is okay, should get executed now. Our order is somewhere, yeah, just went down. Yeah, our order is somewhere here. Let's see. The market goes up a little bit, maybe another 5 points, that will get executed. Let's see. I'll be executing the another order also because that is for the 100 quantity. When this 100 quantity gets closed, so I'll be executing the another 100 quantity order. I don't know when it will happen. When it happens, I'll get executed. So this is the rollout we are doing, the weekly roll we are doing. We closed 9 September, 17,500 call at 50 paisa. So we sold at about 36 rupees. So we closed at 50 paisa. So now we are rolling to the same strike, rolling out. We are not rolling up or down, so we are rolling out. It is the same strike, 17,500, but just we are rolling to the next week options. Okay, it's coming down 39. Let's wait for this. Even I get a little bit lower price also, it is okay. This is well above 3 to 4 rupees above our regular strategy formula premium. So let's see means how it works out. Once it gets executed, I'll keep you posted. I'll get back to you. Okay, thank you. Bye. Hello guys, welcome back. So we have got another sell order for 17,500 CE 100 quantity, because since this order is getting delayed for execution, so I have just put another order for 40. The previous order was already executed at 40. We'll see the position. So the order what was executed is here. So this is against the 17,500 December option, means that is the order which got executed at 40. So we will see whether the price comes back to 40, because it is right now trading at 38, 85, 38, 39, somewhere it is trading. So even if it is coming down, does not matter. So we will wait for this order to get executed. So this order is already here. It is waiting to execute at 1 rupee. And we have got the other order also pending, the weekly sell order. So from here we are rolling up. And when we are rolling up, we are rolling out also, means 17,500. 17,400 we are buying back for a lower price, and 17,500 we are selling for the next week. So let's see means how all this works out. So how to roll I have shown. So we will see how this works out. Once this order gets executed, I'll get back to you. Thank you. Hello guys, welcome back. So the price was bleeding for 17,500, the option premium. So I have moved from 40 to 37, but it continues to bleed because the market is going down a bit. So if it comes back to around 17,345, so this should come to 37. This one is almost about to get executed because it is just only 10-15 paise away. Once this gets executed, then we will free up some margin also, but does not matter. I have enough margin for this. Yeah, 1 rupee should, yeah, executed. Yes, so that is executed. So we are waiting for one order to get executed. So but the price is bleeding. We are 37 is a right premium for us to sell, but now right now it is trading at about 34 rupees. Let us see means if the market recovers a bit so that this order will get executed at 37. If it does not get executed, then we will try to see what price we are getting executed, because we already got one order executed at 40. So we are having only another one order, 100 quantity to get executed. Even it gets averaged out, that is okay. We are still okay with it. So this is about 2000 rupees we received here. Here we are trying to get somewhere about 3700 rupees. So 5700 rupees. Let's see, if we say 5700 rupees divided by 150 quantity, so we are averaging out at somewhere about 38. If not, we will be averaging down, means if we are getting executed at 35, so 35 means we have got 2000 plus 3500, so divided by 150, so we are getting about 36.6 rupees, but that is still okay. Let's see means it's picking up quietly. It is picking up. Let's see means how it gets executed, and I'll get back to you once this order gets executed. Thank you. Bye bye. Hello guys, welcome back. So the premiums have melted beyond our range, means there is no need to execute at 30 or 31. So we will try to move 50 points below. I am not very comfortable with that because the premium is in the range of about 43-44 rupees. So we will try to execute at 44. We will cancel this order. This is no good. This order is. So we will try to sell 17,450 at about 44. Let's see, 100 quantity at 44, 4370. It's coming down, you see, means the market is going down, so that's why the premiums are coming down. Let's see means if it goes little bit up, this will come to 44. So we will sell this regular overnight limit. Yeah, order is pending. Yeah, I think picking up a little bit, should get executed. Yes, done. See, price has gone up a little bit. That's okay. Minor here and there, it happens. So, okay, this week what we have done, we have about 50-point risk is there because 17,500. Actually, I wanted to do the 150 quantities, but I could not do. But it is done. You see, I could have executed at 45. Means now the market is picking up, so as the option premium is also picking up. So this is a kind of bad luck. You cannot help 46 now. So it's kind of bad luck. Once till the time we were trying to execute the order, it was just lying flat. The moment the order got executed, it is flying. So what to do? That is what the market is. So let's keep these positions and let's see means how things go. And this position we will track from now on. We have only 4 trading days in the next week. So tomorrow is a holiday. 10th of September is a holiday for the Ganesha festival. So we have Monday, Tuesday, Wednesday and the expiry day. So we will try to collect as much as possible in this premium, because 40 and 44 we have done. This 44 is a bit risky because this is 17,450 and we are at 17,300, 350. So you see it's already bleeding. It has gone to 47. This has gone to 33. This will come to 35. So we could have executed at 35. So we thought the market will go down. But now the moment the order got executed, the market is picking up. This is kind of bad luck, but that is okay. We have 4 days left. Let us see means how this works out. I'll keep you updated. Thank you. Hello guys. Just to update. So we have closed our weekly positions. Last week's position at somewhere about 5,425 rupees. If you remove the brokerage, it is about 5,400 rupees, little less than 5,400, which is a very good profit considering that our capital deployed for this strategy means for 150 quantity, 3 lots. So 3 lots is 1,20,000 rupees per lot. 40,000 rupees is the margin required for the call calendar. So we have got about 4% this week, so which is good, but 4% is only the booked profit. The unbooked is huge amount of unbooked is still there. It is about 21,000 rupees is still left. We are doing well right now on the call calendar. If next week if the market picks up, we will have trouble with 17,450, but that loss will get compensated by the 17,000 CE December, which is quite deep in the money. If the market goes down a little bit, these two premiums will start melting and we will have a profitable week next week also. Here you can see that we have got 4,400 rupees premium to get, and here we have got 2,000 rupees premium to get. So 6,400 rupees targeted next week. We are closing at about 6,000 also, it is okay. If the market shoots up, then we will be closing the December 17,000 spread. The 100 quantity and 100 quantity, we will close it for a very good profit. So that's all for now.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab. So do not forget to check that from time to time.